We are here today to launch our July bi-monthly report, focusing on trends and transactions in the Northern Ireland commercial property market in the first 6 months of 2016. We will also share some initial thoughts on the potential implications last week's surprise Brexit vote may have for the commercial real estate sector in Northern Ireland specifically. While Britain voting to leave the European Union in the June referendum was always a distinct possibility, the Brexit result took the commercial real estate world by surprise. Needless to say, anything that creates uncertainty is unwelcome in the property market, and to say that the Brexit vote has created uncertainty is clearly an understatement, particularly considering that Northern Ireland has a 500-kilometre land border with the EU and indeed voted to remain in the European Union. However, it will be some time before there's clarity on how Northern Ireland's economy and in turn the real estate sector will be affected by this unexpected development. We will monitor the situation and keep our client base informed of developments, both positive and negative, over the coming months. Activity in the commercial property market in Northern Ireland has mostly been on hold in recent months, as some occupiers and investors delayed decision making until after June's Brexit vote. Unfortunately, the surprise result of the referendum will now prolong this uncertainty that has prevailed in recent months, which is most disappointing. In the normal run of events, activity in the commercial property market in Northern Ireland is heavily skewed towards the second half of the year, with the largest proportion of leasing, sales and investment activity generally occurring in the second half of the year. It remains to be seen if this will be the case again in the second half of 2016, or to what extent uncertainty created by the Brexit vote will stymie investment activity over the coming months. Activity in the office market in Belfast during the first half of 2016 was quite good, with as much as 75,000 square foot of leasing activity recorded in the city in Q2, bringing total take-up in the first half of the year to 235,000 square foot. This compares favourably with 87,000 square feet of leasing activity recorded in the same period in 2015. Transactions agreed recently include the letting of more than 16,000 square feet to City at Donegal Square North, the letting of over 11,000 square foot to Ernst & Young at Bedford House, and the letting of over 9,000 square foot to Arup at Bedford House. According to our research, there's up to 750,000 square foot of active requirements for office accommodation prevailing at the mid-year point. However, it is now unclear if these requirements will remain active in light of the Brexit decision, or if potential occupiers will now delay decision making until the political and economic landscape is somewhat clearer. In particular, occupiers will need reassurance about the anticipated reduction in corporation tax that was due to come in force in 2018. In any event, there is very limited stock available in the city at present, with the City Quays 2 building being the only new office building due for completion by next year. Against this backdrop, prime office rents in Belfast are steady at £17.50 per square foot at the mid-year point, and are expected to reach £18 per square foot in the city over the next 6-month period. We've continued to see good levels of activity in the retail sector over recent months, with some of this activity occurring outside of the core Belfast market, which has been particularly encouraging. With vacancy remaining low in the better schemes and high streets in Belfast, securing premises is proving a challenge for many retailers, and this in turn has been putting upward pressure on rental levels in some locations. Recent transactions in Belfast have included lettings to Echo Shoes at Victoria Square Shopping Centre, a letting to The Entertainer at Castle Court Shopping Centre, a letting to Home Bargains at Hollywood Exchange in Belfast, and a letting to Greggs at Royal Avenue in Belfast. We've also seen lettings to Go Outdoors and Smith's Toys at Valley Retail Park, and to Pandora Jewellery at Cornmarket. Understandably, consumers will proceed with caution in the coming months in light of the Brexit decision. The weakness of sterling in the aftermath of the vote is, however, likely to lead to a surge in shoppers from the Republic in the short term, which will benefit schemes in border towns in particular. In the longer term, retailers will need to clarify what is likely to happen regarding the imposition of tariffs, customs, and the possible reinstatement of a hard border with the Republic. The investment sector will undoubtedly be the one that's affected most by uncertainty of the coming months. Some investors who had been putting off purchasing decisions until after the Brexit vote may now retreat until the political and economic landscape is somewhat clearer. However, the opposite could also happen as investors seek to take advantage of currency movements and see this as a unique buying opportunity. It will probably be a combination of both. The uncertainty that the Brexit decision has created will effectively keep interest rates lower for longer, which bodes well for investment in real estate, considering the arbitrage that continues to prevail between interest rates and real estate yields. Local investors have remained active regardless, with much of this activity occurring outside of Belfast, with transactions recorded in locations such as Banbridge, Strabane and Coleraine in recent months. According to our research, there were 10 investment transactions totalling £70 million signed in Northern Ireland in Q2, bringing total investment in the first half of the year to over £103 million in 15 individual transactions, compared with £141 million of investment sales in the first half of last year. Investment transactions concluded recently include the sale of Avenue House in Belfast for over £6.5 million, Leslie Retail Park in Strabane for more than £5 million, and Carlton House in Belfast for almost £2 million. The unexpected referendum result may see some investment decisions being put on hold in the short term until a clearer picture emerges as to the political and potential implications of Brexit on transaction volumes and indeed values. However, other properties that were due to be brought to the market in the second half of 2016 will proceed regardless, in our view. For now, our prime yield series remains stable, with prime high street retail priced at 5.75%, prime offices at 6% and prime industrial at 7%, which remain very attractive compared to yields in other regional UK locations. Assets that are currently being offered for sale or are sale agreed include Down Retail Park in Downpatrick, which is sale agreed at approximately £17 million, Lisnagelvin Shopping Centre in Derry, which is sale agreed at approximately £16 million, and the Tower Shopping Centre in Ballymena, which is guiding £6 million. We are currently preparing up to £75 million of investment sales, which we are due to launch in the second half of 2016. There's been continued activity in the planning sector in recent months in Northern Ireland, with particular activity in the student accommodation and hotel sectors, both of which are defensive sectors in this post-Brexit referendum universe. Planning was recently granted by Belfast City Council for a new 250-bed hotel on Corporation Street. Meanwhile, construction is now continuing on a number of hotel projects, including a 179-bed Hampton by Hilton hotel at Bruce Street in Belfast, the 216-bed Grand Central Hotel at Bedford Street, and the 120-bed Titanic Hotel at Titanic Quarter. Just as in the retail sector, the hotel market stands to benefit in the short term from the weakness in sterling that has materialised in the aftermath of the Brexit vote. Regardless of how much stock is in the planning process, however, until such time as there is clarity on the ramifications of the Brexit vote, developers of new schemes of all types, and indeed their financiers, are likely to proceed with caution. In summary, up until the Brexit vote, Northern Ireland was enjoying political and economic stability, and was looking forward to the benefits that would derive from a reduction in corporation tax in 2018. There will now likely be a hiatus in confidence until the results of the decoupling with the EU become clearer.